Afternoon, guys. How are we doing today? Good, good. If I can just get a quick audio and video check as usual here, let me know that you can hear me and we're coming through loud and clear and that you can see my screen here. Make sure we're all up and running before we start rolling here. We're going to dive right in today. So if I can just get a quick feedback from you. All right. Thank you, guys. I appreciate that. Appreciate that very, very much. Thank you so much. Okay. Well, if you've welcome to the webinar. My name is John Skelton. I'm with apexinvesting.com, and the webinar is brought to you and hosted today by Nadex. So we appreciate them having us on, and we're here to help you, give you some free education and information of who is Nadex, what is Nadex, what are the products they offer, show you some ways that you can incorporate them into your trading here. So if you've been with us recently, about a week ago, we started over kind of from the ground floor with binaries. We kind of circle back around to basics for those of you that are new. And I'll show you here in a minute where you can catch up on that. And today we're just kind of building on that. Last week we talked about binaries 101. What is a binary? How does it work? Very basic. And today we're just kind of taking that to the next level of, are you choosing the right binary for your system or strategy? Kind of want to walk you through why there's so many different ones, and how the different ones work and why you might want to choose one over the other. Okay, so let's get our disclosures knocked out. Trading futures, options, or any financial instrument involves risk, may not be suitable for every investor. And as always, trading is, decisions is your sole responsibility. Past performance not indicative of future results. If you are brand new to Nadex, hop on over to nadex.com. You get some great info here. Nadex now offers 3 different products. They offer binary options, call spreads, and touch brackets. Touch brackets are a new product being released. They're in the demo platform right now, and shortly will be in live, and you'll see some education coming out on those soon. Right here, you can go over to trading platforms. I want to bring your attention to demo trading platform. If you don't have a demo account with Nadex, hop on and get one right away. You can fill out some quick info here, and Nadex will give you a free $25,000 demo account. And you can fill out the info, hop right into the demo platform. It's a great place to get familiar with Nadex, understand the different products and expirations, how the platform works, entering and exiting orders, and great way to do tests, when you're trying out new strategies or new systems or trying to learn new things. For example, if you're new to binaries, today we're going to talk about the different types of binaries that are out there. It's a great place to kind of test them and see which one works best with, strategies that you use, okay? Again, my name is John Skelton with Apex Investing. We're an online education company. We've got over 25,000 members. We have, strategies and systems and indicators and live trade rooms. We've got all kind of education. Feel free to check out our sites, apexinvesting.com. A lot of free information over there, a lot of, free tools as well. We're happy to answer any questions for you. We've got all kind of courses. We've got a big, 2-month course we're doing right now, starting next year, and all kind of great stuff there. And we're more than happy to help you out anytime and get your questions answered as much as we can there. I've been with Apex now for about 5 years as head of operations. I've got a background in banking as a stockbroker, but I'm a trader just like you. I literally trade Nadex binaries and spreads every day. And what we're here for, like I said, is just to help you along. We've helped literally thousands of traders and educated thousands of traders, and I like to think we have a pretty good grasp on where people have a lot of questions when it comes to the Nadex products. And that's why we do these webinars and kind of start with the basics foundation and build from there. So that's what we're going to talk about today. We're going to talk about the different types of binaries. Some of you may, if you're familiar with options, you may know what this means, but OTM-ATM-ITM, what is that? Okay. And, okay, real quick, guys, because I'm going to be jumping into this really fast here. All of these webinars are recorded, by the way. Okay. If you go over to Nadex, you can go right here to Learning Center, and you go to Webinars. Okay, another great source of information here. If you click upcoming, this will show you all the upcoming webinars that you can sign up and get registered for. Okay, but if anything we go through today is kind of over your head or you missed some of the past webinars, you can go to right here on demand, and you can find me right here, John Skelton, and you can catch up on any webinar. So if you're new to binaries and anything I'm going over today, because I'm going to be kind of going really fast here through a lot of information. Most of your questions will be answered as we go. I'll try to hit any questions at the end here. We've just got limited time. But if anything's a little over your head because you're still getting a grasp on the basics, you can go back and watch last week's webinar of, Binaries 101 or all kind of other webinars in here, okay? So be sure to check that out if need be. So what this means is out of the money, at the money, and in the money binaries, okay? And so we're going to talk a little bit about those and expirations and strategies and premium and why you might want to be using different ones. We're not going to really spend a lot of time today going back over, the binary basics that we covered last week, but, just kind of to set the foundation here. If we hop on over to the Nadex platform and let's go to indice binary, let's pull up Wall Street 30, which is a derivative of the Dow, the mini Dow. Okay, this pops up here. This is what's called the Nadex strike ladder. Okay, because each binary contract has a strike price. That's what this number is right here. Okay, and each one of these different lines, as it were, these options, is a different binary contract. Okay, and if we just open one up randomly here and open up the ticket, what is a binary contract? Well, a binary option contract with Nadex, it's simply a statement. Okay. This statement says that the Wall Street 30, which is derivative of the, like I said, the E-mini Dow, the Wall Street 30 will be greater than 24,587 at 2 p.m. today. That's it. That's a binary contract. It's a statement. And like I said, it's binary, right? It's yes, no, true, false, 0, 1. The statement will happen or it will not happen. Okay, and as we know, if I think the statement will happen, I might be interested in buying the contract. The offer side is the buy side. If I think the statement is false, I don't think that will happen, then I would be wanting to, perhaps sell the contract. And at expiration, a binary contract is either worth 0 or 100, okay? And we also talked about, guys, if you look here, you'll notice, like here, at the top, we've got 24,779, right? And then 767, 755, right? These strikes are 12 points apart, right? And it goes all the way up here from 779 down to 443. So you've got a lot of different options, a lot of different contract strike prices that you can say yes or no. It'll be above or below this level, okay? Now, over here, you've got the offer side. This is the price you can buy that contract for. This is the price you can sell the contract for. And if you just kind of in your head, let's talk about the buy side. If we drew a 0 up here and drew a 100 down here, okay? Because again, at expiration, a binary is either worth 0 or it's worth 100. You can kind of see if you drew a 0 in your head up here, 7, 8, 9, 10, 20, 30, 40, 50, 60, 80, 90. You kind of see how this prices work from closer to 0 up towards 100, okay? Now, when you're brand new to Nadex, you kind of open this up, and you say, okay, this is like a menu. All this is just simply a pricing menu, right? It's a menu of what I want to buy or sell, okay? And that's partially true. That's, what it is. But it's not just a menu, all right? This helps you see quite a few things. And I want to help you look at this page as a newcomer in a completely different way, okay? And I want to talk to you about the different types of binaries. Do you remember last week I talked to you about how, if, for example, let's just open up this one, right here. Okay, so this is the price I can buy it for. This is the price I can sell it for. And I talked to you about how with options and with binary options, the way they're priced, the pricing model, okay, just based on the pricing model itself, you can look at it in a sense of probabilities. Because at expiration, it's got to be 0 or 100, right? Okay? So you can look at the pricing model itself as a probability. Now, that doesn't take into account what's happening on the chart, right? Okay, the market could be about to turn up, market could be about to turn down. The pricing model doesn't look into the future and know what's going to happen, right? It's taking into account what's happening right now. Okay, so if we look at the buy side and the sell side, and we average these two numbers, meaning what's right in the middle between 71 and 81? What's right in the middle? About 76 bucks, right? So from a pricing model standpoint, you can say there's, a probability of about 76% that right now, this moment, just from the pricing standpoint, about a 76% probability that this contract will expire in the money. It will expire true on the buy side. That makes sense? Okay. If we go and we look down here, and this one I can buy for 10 or sell for 4. Well, what's right in the middle? About 7, right? So from a pricing standpoint only, you're looking at about a 7% probability of this one expiring in the money. Makes sense as far as the pricing. Okay, now I want to talk to you about what's called an at-the-money binary. So here we've got about 60 and 50, okay? So this one, are like 48, 50, that. We're just going to call it around 50. So it's about a 50% probability. All right. So why? Okay, well, I want to reshape your thinking when you look at this page. And I want you to be able to think about up here is 0, down here is 100. What's right in the middle between 0 and 100? Well, about 50, right? So look at this strike right here, 24,551. Where is the current market indicative at right now? 547. The indicative, the current market, is very close to this strike price, right? Or to say it differently, this strike price is very close to where the market is right now. Does that make sense? So is this one right here, right? 539. It's right around 50 bucks. It's 540. See that? 541, 542, 539. Where is this one priced at? Both of these here. See, the market's kind of right in between these two. Notice they're about the 50 range. Well, why? If a strike price is right at where the current market price is, why would it be priced around $50? Well, again, at expiration, it's got to be what? It's got to be either worth 0 or it's got to be worth 100, right? So if that strike price is right around the current market price, it's kind of right on the fence, right? It could go up a few ticks and expire, be worth 100. It could go down a few ticks and expire, be worth 0, right? We don't know yet. We still have an hour and 45 minutes till expiration. Okay, so does that make sense? When it expires, it's got to be worth 0 or 100. But if it's right there at the line, kind of straddling the fence, it's priced right around 50 because it's about 50-50 right now. Does that make sense? Type in the questions box there, yes or no, because this is very important. If you get this concept, it totally will change how you look at binary options. Okay? So does everybody understand that? If the strike price and the market price are right about the same, that contract is going to be priced right now. I don't mean at expiration. I mean right now, about 50 bucks. Let's look at something else. So this is 2 p.m. We got an hour and 44 minutes. What about today at the end of the day? Okay. 24,550, 24,530. Okay. What's the closest one? Well, the market's at about 560. So it's between these two strike prices. And notice where your pricing is here, around 50 bucks, even at the end of the day. See that? What about the end of the week? All right, tomorrow. Well, 560, you know, this is about the closest one here. It's priced around 50. It doesn't matter whether you have 5 minutes, 2 hours, 5 hours, or 5 days. If the market price and the strike price are right around the same, it's going to be priced around 50. Okay, you see that in those different examples there? Hourly, daily, weekly, it doesn't matter. That's how they work. Okay, so we understand then why that's called an at the money binary, right? Because the strike price is at around the same price as the market. We also now understand why it's priced around 50. Yes? Does anybody have any questions on that? If so, say it now, because if you grasp this concept, everything else will make a lot of sense and a lot of light bulbs will go off in your head, especially if you're brand new. Any questions on this? And it doesn't matter what market we go to. Let's look at a different one. What do y'all want to look at? How about the ES, the S&P, right? Let's look at these 2 o'clocks. Where's the market? About 26.45. 26.45. Where is it at? About 50 bucks. You see it? It's an at the money binary. Okay? Priced around 50. So, that being said, why do we think that this one up here, okay, we got 74 and 84, now we're at 65. So, you know, we're close to about a 70% probability here, right? So this is a higher probability and a higher priced binary. Why? Well, what does the statement say? The statement says that the Wall Street 30 will expire greater than, see, the market's moving. Let's look at a different one. I want to look here around the 70 range here. What does this statement say? That it'll expire greater than what? 551. Where's the market already at right now? 567. The market's already 16 points above this strike, right? The statement says it will be greater than 551. It's already greater than 551. It's almost 20 points greater. So as long as it stays up there, and you bought this one, it would expire being worth $100, right? So does that make sense? When the strike and the price are right at the same, it could fluctuate up or down. It's about 50-50, right? When the statement's already currently true, and the market's already above this strike, it's a much higher probability from a pricing standpoint that this will expire in the money worth 100. Does that make sense? So that's why it's priced higher and priced closer to 100. Does everybody grasp that concept right there? We're looking at the Dow right now, okay? Let's take a look. Okay, let's visualize this a little bit. All right, let's look at a Dow chart. So I want you to, I don't want to just be teaching, you know, I want you to see this, because if you get this and grasp this, it will really help you understand a lot of things. What am I looking for? I'm looking for this right here. And I'm looking for this. Okay. So where's the market at right now? You can all see it right here, right? About 24.55. Okay. Well, let's go back. Where's 24.5? It's close to right in here. It's between these 2 strikes, right? Okay. Now it's at 25.60. See, it's about 50 bucks. Where is this one here? If we were going to look at buying this one for like $78, right? Much higher probability from a pricing standpoint, okay? Or even this one right here. Where's 527? Well, let's look. 527. Like I can't even see it on the. Can't even see on the chart. I've got to scroll the chart. Okay, So 527 is down here. See that? So we're looking at a binary contract and we're saying, okay, I think the market's going to go up. I can buy right in here where the market's at now for about 50. Or I can buy way down here for about 75. Does that make sense? So this one right here at around 50 is called an at the money binary. This one down here is called an ITM, or an in the money binary, because the market's already above this, right? Does that make sense? Why it's a little bit higher probability. So what happens? Notice right now the market's coming down. See, we think, oh, I bought, so the market has to go up. But right now the market's coming down. You see it? What happens if the binary expired right now? Like, the market was up here. We bought down here, and the market's coming down, 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 and it expires right here. Would we be worth 0 or worth 100? What do you think? Yeah, it's still worth 100 because the statement said the market has to expire above right here. So do you see that? Do you see kind of the strength of the in the money binary? Because what can happen? Let's look at it like this. If I had bought, okay, let's look at it like this. If I buy right now, and I buy an at the money binary right here, for me to be profitable at expiration, what has to happen? One thing has to happen. Only one thing can happen. The market has to expire above right here. Correct? Does that make sense? Like, if it expires one tick below it, it's 0. The market has to go up. Agreed? For that to expire profitable, the market has to go up. For an at the money binary that I would have bought right there for around 50. Everybody got that? Yes? Okay, so at the money. If I was to get an in the money binary, okay, down here, just as an example, and the market flew up, would this expire worth 0 or worth 100? Right, worth 100. If I bought this binary down here and the market just died out and it stayed flat and it just stayed right where it is in this zone, it just stayed there, would this binary expire worth 0 or 100? Still 100, right? What if the market came down, 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 and it expired right there? Worth 0 or worth 100? Still 100. So do you see the difference there? Okay. If I bought right here at the money earlier, it has to go up and expire above that strike. If I get this one down here, a little higher probability, higher price, higher risk, we'll talk about that. The market can go up. The market can stay flat. The market could even come down as long as it doesn't go below the strike, and it's still profitable. Does everybody see that? Everybody understand that? That it's a higher probability. It gives me some room, gives me some insurance, gives me a little bit of edge, right? Therefore, it's priced higher, closer to 100. Okay? Does that make sense? Okay. Yeah, I can do that, Ken. We can circle back around. Okay, so everybody see that? Okay, perfect. So now, looking at this chart again. Okay, looking at this chart again, and I say, I'm going to go up here and buy a strike way up here. What has to happen for that binary way up there to expire in the money? Like only one thing can happen. The market can only go one direction. The market has to go way up there. And the market has to go in that direction, way up there, stay up there before 2 o'clock. Could that happen? Sure. What's the probability as of right now when you look at the market level from a pricing standpoint? What do you think the probability is of the market coming way up here to higher than 740? Think that's a little bit lower of a probability of it happening? Well, let's find out. What is this strike right here? 743. Where is it priced at? I can buy it for 7. I can sell it for 1. What's right in the middle there? About 4? 4% probability. Do you see why? Do you see why? Because look, 743 is way up here. Look how far away it is from the market. Do you see that? Any of you that are kind of new, does that make a little bit of an aha moment when you're thinking about binaries and how they're priced? Because even just looking at a chart, you can say, okay, yeah, I see why that one's priced like way down there at $7. It's out of the money. It's way out of the money. I understand now why right here where the market's at, it's about 50. And I can see why those other ones I can buy down here for like 70 or 80 or whatever. Okay, maybe that needs to be higher up. I understand that now. Does that kind of put it into perspective a little bit? 0 up here, 100 down here, 50 in the middle. Everybody see that? And do you understand now why these way up here are priced so low and these down here are priced a little higher, and why this one's right in the middle? Does that take some confusion out of it? So now, when you're a newbie and you open up the Nadex platform and you pull up a strike ladder, is this just a random menu to choose from? Or does your eye automatically now go and try to find 50? And you kind of draw an imaginary line right here in your head. And without even looking at the market, you can say, boom, right here's where the market is. These are higher probability already in the money. These are lower priced in probability further out. Boom. Now I'm looking at this in a different way. Does that make sense? Can everybody see that? Okay. So now let me ask you a question. How many of you that are new to Nadex, or when you were new, or whatever, thought this thought right here? I watched that webinar that John guy did, and you know, it was pretty good. He explained to me Binaries 101. I understand if I think the market's going up or going to be above this, I want to buy. If I think it's going down, I want to sell. That makes sense. Yeah? And you came over here and you said, okay, well, you know, I'm still new to this, so if I look to buy this one, and I want to buy one, ooh, I'm risking $81 to make 19. Oof, I don't know if I want to risk 81 bucks. So let's look. What is this here? Okay. So if I want to buy this one, okay, well, I can risk about 60 to make, you know, oh, that's wrong. Sorry. So I can risk about 53 to make 47. Okay, I like that better, but oh man, what is this? $5? I can risk $5. Hey, I can deal with $5. I mean, that's, what is that? That's a hamburger. That's a meal. whoa, I can risk $5 and I might make 94. Ooh, I like that. Let's place that order. Raise your hand, be honest. How many of you, when you've traded binaries or started to, chose your binary based on that number right there? Whether you, and some of you said, well, I chose that number because I like the low risk, or I chose that number because I like the high profit. Yep. And then what happened? I'll tell you what happened. You don't have to tell me. I'll tell you. You bought this binary. Okay, let's go ahead and focus this. You bought this binary way up here. And what happened? You're starting to get closer to expiration. What'd the market do? Came up, and it came up, and you're like, woohoo, I did it right. I thought it was going up, so I pressed buy, and it's going up, and it's going up, and it's going up. Man, I'm the king here. I love this. And it's going up, and it's going up, and it's going up. And it expired right there. And that binary expired worth 0. What the? These binaries don't work. Binaries are a rip. They don't work. Because I was right. The market went up, so I bought. And I didn't make money. These binaries won't work. How many of you said it? How many of you were frustrated when you were getting close to expiration and the market was going up, but you were going to 0 and you expired at 0? And you got mad and you thought binaries don't work. Do you see now why? I mean, like, do you really get it? If they worked exactly like they're supposed to. Okay, now, I'm talking about expiration. If you bought way up here and the market's coming up, 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 it would be going up in value and you could get out of it with some profit. But we're talking about at expiration here. But we've all done that when we were new, right? And we just said, man, this doesn't work. Can you understand why now? Yeah? So for any of you that are new, does that help at all? Just this brief thing we went through, does that help you understand, especially when you're looking at a chart and where these prices are, why they're priced a certain way? And can you also understand, when you look at this strike ladder a little differently, how to just immediately find the 50 area and draw a line? That's where the market is. These are already in the money. These are out of the money. Okay. Helps you visualize it quicker. Now, we don't have time today to get into strategy and system like in depth. Okay. We're going to be doing some of that. Okay. But I want to clarify something. I'm not sitting here telling you that buying out of the money binaries low risk is bad. I'm not telling you that at all. I do it every day. But I have to have a reason to do it, right? I can't just throw on these cheap binaries just hoping the market's going to go up. I have to have a reason to think that it's going to go way up, right? I have to have a reason to think that I want to get a far enough out expiration to give the market time to get up there. I've got to really be expecting a big move to do them, right? I mean, you know, maybe I'm looking at something and I say, okay, there's a lot of chop in here, and, you know, if it breaks out to this side, maybe there's some big strong level up here of you know, support or resistance or a level. And I think it's going to go there, but it might take a long time, so I want to go into the day, or I want to go a couple hours out. There at times are reasons and strategies for choosing low risk, high reward out of the money binaries, right? But does that mean you want to do it every single time? No. If the market is ranging like this, look how the market's been ranging in this box. Does it make any sense of a brain cell to be using out of the money binaries in this type of market? No. Right? that make sense? Now, yes, the fact that you can exit early, okay, does help you. You know, it's actually a very powerful tool, Kenneth, yes, in whatever strategy or system you're using. But doesn't mean you'd want to use it in a ranging market like this, right? You know, like you may buy way up here, the market breaks out of this range, it may only get halfway up there. But maybe you bought it for like 10 bucks and now it's worth 30. And you just want to get out, right? Okay. So yes, there are definitely times to use these, okay? But you have to have a reason for it. If your strategy is a long-term trending strategy and you think the market can get way up there, maybe you want to use them. If your strategy is a short-term, very short-term, short directional strategy, maybe you want to be looking more at the monies or in the monies, right? If you're in a range-bound, okay, quick question here. If you're in a range-bound market like this, and you're in the middle of the box, do you want to do an at the money? Meaning 50-50 where it's got to be just above it or just below it? Do you want to do even an at the money when it's going above your strike, below your strike, above your line? Not really, right? Maybe you might want to consider then an in the money strike, right? Maybe down, you know, maybe in a ranging you want to consider an in the money of, hey, as long as it stays ranging, I don't care if it ranges, as long as it stays above here, okay? Now, keep in mind, so we understand in the money, at the money, and out of the money, right? But we've been talking about the buy side, okay? If I was to go and buy this one right here, okay, for about 30, okay? It's 24,611. Where's 24,611? Well, 611 is going to be somewhere up in here, right? Okay. So if I buy in that, that's an out of the money binary because it's above, the market has to move, right? But what about if I'm selling it? Well, if I'm selling it, what am I saying? Okay. If I sell it, I'm saying that this statement will not be true. The market will be below this. So if I'm selling it, saying the market's going to be below it, okay, this is an in the money binary, isn't it? Okay, well, bad example, the market's moving. But you understand what I'm saying? You have to look at the buy side and the sell side. Because if this is a low, if this binary down here, okay, I mean, whatever, we can choose this one again. Why is it priced down here at $30? Because it's a lower probability that the market's going to get all the way up there. But that means that strike price is so far up there that if I sell that strike price, if a binary is out of the money on the buy side, it's an in the money binary on the sell side, because I'm selling a strike so far above the market that I'm just saying, hey, it won't get up there. It'll expire below this. So does that make sense? If something's out of the money on the buy side, it's technically in the money on the sell side, right? Because you're buying yourself that extra room. Okay. So guys, I hope that helps. That's we're running short on time here. We've got to get running, but just as a basics kind of overview there of, like I said, last week we talked about the basics of a binary. What are they? This week, I wanted to help you realize and not be so overwhelmed with all of your binary choices so that you realize, hey, I don't want to just take the lowest priced one. I don't want to just take the highest priced one. I don't want to always take the middle. I want to understand why they're here. And I want to understand how, based on my strategy or system, whether it's longer term or trending, and based on where are my support and resistance levels. If the market does pull down, where do I think it might pull down to before it bounces, right? So don't be so overwhelmed by this strike ladder. Realize there's a lot of different options here for you. They're priced a certain way for a reason, based on where that strike is in relation to the current market. And then you got to look at what is the market condition? What is my strategy or system? What is the chart telling me to do? Which one gives me the best edge in the current market condition with the strategy and system I'm using? Okay. Moving forward, guys, we'll talk a little bit more about some different strategies and some different ways to utilize some of these binaries together. But play with that a little bit. Utilize your demo account. Whatever strategy or system you're testing, you do some demo testing with in the money, at the money, out of the money. See which one works better with your levels and with your strategies. Okay? Again, make sure to hop on over to nadex.com, get signed up for upcoming webinars, and hop on over to apexinvesting.com and check us out there. Okay? All right, guys, thanks so much for your time. I'm going to let y'all run here. We will see you next time. Have a great one. We'll talk to you later. Bye-bye.